So for you all coming over here, same state tax policies. Y'all know the system. Um, in North Carolina, we run mostly off property taxes. This is a chart we have of all the different states across the country. Property taxes are in gold, sales taxes are in dark blue, and income tax or other forms of taxation, state transfers are in light blue. So the state does send some state dollars around to different communities, but it's a very small part of our local taxation. And when I say local, I'm saying city and county combined. But local is what you control locally. So y'all inside High Point, most of you are Guilford County taxpayers. I know there's a couple of little other counties that you're part of, but generally speaking, you're a Guilford County taxpayer. In North Carolina, our taxes are kind of simple. Our tax assessed value should equal market value. There are a couple of exemptions if you're elderly or disabled veteran, but that's basically it. We don't have enjoy a lot of taxations the way that other states do. So in Guilford County, if you have a $200,000 house with no exemptions, you're going to be valued at $200,000. You're going to be paying about $1,400 in county taxes. In High Point, you're going to be paying more than that when you add in your local millage rate of 6 mils. So you're paying 7 mils to the county, 6 mils to the city. By comparison, you look at Greensboro. Greensboro is actually paying more millage to the city of Greensboro than what y'all are paying as a local mill to High Point. So we had the numbers, so we just wanted to show you in comparison. So you're going to be paying a little bit less taxes in High Point than you would be in Greensboro. Now your dollar in High Point, 47 cents of that dollar is going to the city, 53 cents is going to the county. So you're actually paying a little bit more to the county than to the city for all your dollars. And that's the way your system works. There's no magic proportionality to this. We see it's different in every place we go, but we just want to make this graphic for you. Now your budget for your city, on the left is your revenues. You're about 154 million of revenue generated to the city. You're spending about 145, so there's some money going to reserves and other parts. But basically, we like to make charts. So this is a chart of your cash flow. This is the stuff we're going to be mapping. Note the sales taxes. Now, as a North Carolina resident, I'm just going to tell you this is one of my major beefs. You've got close to 30% of your money is being produced in sales taxes, and we can't look at it. Our firm is not able to get it. This is a map that we have of different states that we've worked. You'll note that North Carolina is red, which means we have no access. I can go to places like Colorado, California, progressive places like Louisiana, South Carolina, and I can get the data, but not North Carolina. I mean, I'm going to keep on showing this chart until we change our state policy. I would recommend to each and every single one of you, talk with your city, your county, your state legislature. We need to get this changed. This is just kind of bad. Anyway, I'm done with my stump speech. So I showed you a pie chart. This is called a Sankey diagram, which is basically like a flow chart of where your money comes from as those different buckets. Y'all just use one big general fund and then spread it out. There are cities that we work with that do different enterprise accounts in the middle. So there's a chart of accounting that's different in the center. But this is how you operate. This is the stuff we're putting on property on the map, basically.